Okay, so here we have Rogers Limited, which is question number 2. So this is our cash budget question. Here you start with a populated data sheet, so a lot of this information is given to you already. So we're now referring to page 61 of our workbooks where the Rogers Limited question can be found. Okay, now most of this information is here already. The bit that you need to add is the information on the bank loan. So we're told that a loan of 20,000 is taken out on the 1st of Jan. The total loan repayment is 24,500. This is all in part C of the question. And we're told that it's in 24 equal payments that it's paid back. So the bits that you need to fill in is first of all the monthly capital repayment. So that is your the amount of your loan divided by the number of repayments. So in this case, 20,000 divided by 24. That's the amount of capital you're paying back each month. But then on top of that, you've got some interest to pay, clearly, because if you're taking out a loan, you need to pay some interest. And you calculate this as being the difference between your total monthly repayments and your capital repayments. And your total monthly repayments are going to be the total amount that you're repaying, that we've told you is 24,500, divided by 24. So that tells you in total what you're repaying every month. This tells you how much capital you're repaying every month. So the difference between the two is the amount of interest you're paying back every month. So that's the only bit of extra information that you need to add to the data sheet. What you then need to do is pull that through onto your cash budget sheet. So you literally go down row by row and find the data. So for the loan, it's a one-off receipt. So you're linking to the loan amount on your data sheet, which you've just typed in, is down here. So don't put anything into these other months because the loan only comes in 1 month. Receipts from sales is the complicated one. That we would always recommend that you have this working down at the bottom. Okay, so in here you calculate total sales. So your total sales are going to be your sales units from your data sheet, which is here, multiplied by your selling price, which is here. That gives you total sales. But then you need to work out from that when the cash from those sales are received. So you have to look at your payment schedule here on your data sheet. So you're told that 20% is received in cash in the month, 60% after 1 month, 20% after 2 months. So 20, 60, 20. So here you're going to say, well, 20% of 5,500 is received in cash. So I'm taking my C24, which is 5,500, and I'm multiplying it by C25 from the data sheet, which is this 20% cash figure. So 20% is received in cash. The 60% comes in here, because actually you're saying, I'm going to take my 5,500, so this C24, and I'm going to multiply it by C26 from my data sheet, which is the 60%. So you've got this multiplied by 20% is cash in the month. This multiplied by 60% is receivables after 1 month. And this multiplied by 20% is receivables after 2 months. So you can see you're filling in a diagonal line of information from this 5,500. And then for February, 20% is received in the month. 60% is received after 1 month and 20% is received after 2. So again, this cell here is linking to D24, it's linking back to this cell here. So you've got that diagonal line. What that leaves you with is 3 cells here that you will have blank, okay? Because these relate, this one, this one, this one, relate to prior months, because what's received in January after 1 month will be based on December's sales. What's received in January after 2 months will be based on November's sales. And what's received in February after 2 months will be based on December's sales. So for those, we're looking at these figures here, these receivable figures that we give you on your data sheet. Okay, so these are given to you. You're just going to link to them for these cells here. So if you set up all of your formulae first, you'll find that you have a certain number of blank cells. Then you can go to your data sheet to fill those in. You then simply add down. So add down your cash receipts, and that figure there is what you link to up here. So this equals C29. C29 is your figure here. Okay. So you can pull those across. Just make sure that this value here, this subtotal, is a real subtotal of C to H. Don't just take it for granted that you're picking up this cell here. It's best practice wherever you've got subtotals to actually calculate them as an auto sum, okay, not just to take the figure from down below. The mistake that a lot of you have made on your mock is to forget to put a subtotal here for the loan. I think because you don't have anything in these months, you forget it's there. You obviously still need to put the subtotal because you need that £20,000 to appear in your total column. And just remember as well, in terms of best practice, that your subtotals in your total column should always add down. So this 57,000 should be the sum of these two, not the sum of these adding across. Now clearly if you've got your figures all complete and accurate, it's going to end up as the same number, but it's much better for checking purposes to have the subtotals in your total column adding down. Okay. Then if we look at payments, we list all of our payments, so it's just a case of again filling in the blanks. Your purchases are going to be based on your production figures multiplied by your raw material cost per unit, but you're told they're paid with a 1 month delay. So there's 1 month credit. So what you have to pick up here, this 3,800, that is your payables figure. So that's the figure from December that you pay in January. So that is this figure here. Okay, all of the others are then derived. Your wages are paid in the month, so for those there's no payables figure. You're just simply multiplying production again by your wage per unit. Okay. Rent, just be careful. You're told for rent it's £65,000 per annum, which means per year, and there are 4 payments per year. So what you put in here is the 65,000 divided by 4, and you have to be told for rent when it's paid. So in this case, you're told it's paid quarterly starting in January. So you'll have 1 payment in January, and then the start of the next quarter is April, so you'll put 1 payment there. Your management costs and your general overheads, in this question we give you an annual amount and you'd have to divide it by 12 to get the monthly amount. Just be careful in here if we include depreciation. So if we say these figures include depreciation and then we tell you what the depreciation amount is, you would have to deduct the depreciation before you bring it into your cash budget, because remember, depreciation is an accounting adjustment, it's not a cash flow, so it doesn't appear in your cash budget, so just be careful on that. The only other thing to be careful with here, you're bringing your loan capital and interest through, which you've already calculated. They were these figures that we calculated at the start all the way down here, but just be careful, it says that the loan repayments start in February. So again, a lot of you in your mock had figures in January. There should be nothing in January, the repayments start in February. Okay. I'm going to come back to overdraft interest. So for now, just note that your subtotal adds down, so it adds these, and again your subtotal in your total column adds down. So your subtotal is adding these, it's adding down. Okay, whereas obviously all of these figures are adding across, and that's how you get your check. Okay, so your overdraft interest, remember this is where you need to use an if function. So your if function, if you need to look up on this, is page 49 of your workbooks, and we set out in detail how to create the if function. We've also added a round function here at the end, and again that's on page 49. Remember, the purpose of the if is because you only pay overdraft interest if you are overdrawn. And remember, you always pay overdraft interest a month in arrears. So you pay it on the previous month's overdraft. So if we look in January, the previous month's balance was 20,000 positive, so there is no overdraft. If we look in February, January's closing balance was 17,200, so February's opening is 17,200, so there is no overdraft, and so on. So we only pay our first overdraft amount of interest here in in May, we only pay our first overdraft interest in May because it's only in April that we start to go overdrawn. So our May overdraft interest is based on April's overdraft, which remember we start May with. So you'll see there is an overdraft payment in May and June because April and May we go overdrawn. Now, in terms of what the function looks like, you can create it in different ways, but what we're saying here is if our C19 is our opening balance, if our opening balance is less than 0, i.e. if our opening balance is negative, then take my opening balance and multiply it by the annual overdraft interest rate. That's this cell here from the data sheet. But because that's an annual overdraft interest rate, I need to divide by 12 to get a monthly rate. And then I'm also going to need to multiply by a -1 to convert a negative number into a positive number. Because what you're multiplying by is a negative, you're going to end up with a negative number for your overdraft interest, and a negative payment actually equals a receipt. So that wouldn't make any sense. That would be saying, well, the bank is going to pay me £137 for going overdrawn by 23,000 in April, which obviously doesn't make sense. So the multiplied by the -1 is just to get the right sign so that it becomes a positive number. And then the comma here is to say, well, okay, so that's what I want. That's what I want Excel to do if I am overdrawn, if C19 is less than 0. However, comma, if that test is not true, so if C19 is not less than 0, what I want Excel to put in is 0, which is what it's doing in these months here. So the first part of your if statement is the test, then you have a comma. The second part is what you want Excel to do if the test is true, then you have a comma. And the third part is what you want Excel to do if the test is false. And we have brackets around that. And then I would always do my if statement first and then add the round function. So in between the equal sign and where you have your if, you want to type in round, open brackets, and then right at the end you're doing comma 0. The 0 is how many decimal places you want. So we're telling Excel to round the if function to 0 decimal places. Okay, that's what we're doing there. Just in terms of the totals, because again there were some issues with this, looking at some mock submissions. So your cash flow for the month, you might know that as net cash flow. That is just total receipts minus total payments all the way along, including in your total column. That's the same formula. So you can create the formula here and pull it all the way along. Your opening balance for the first month you're given, so that comes from your data sheet. Your closing balance is the sum of your net cash flow plus your opening balance. That gives you your closing. And your closing for 1 month is your opening for the next month each time. Now just be careful in your total column. Your opening balance in your total column is your opening balance for the period. So in this case it's 20,000 and you set that to be equal. So equals, we're linking back to the 20,000 on the data sheet. You could even type in equals this cell here. So what you start the period with is what you start your total column is what you start the overall period with. So in this case, January's opening balance. And then for the closing balance in your total column, it's the same formula as you've got all the way here. So you just pull that formula all the way across. And if your cash balance is correct, if your cash flow, cash budget is correct, what you'll find is that the end result is that this figure here, so the closing balance in your total column, will be the closing balance in your final month. But you don't force it to be equal. You set the formula, and if you've got everything in place, it will be equal. So what you're doing here, you need to check that this column has internal consistency. So we have total receipts of 57,740. We have total payments of 119,083. So 57,740 minus 119,083 equals negative 61,343. That makes sense. We started out with 20,000 in our bank. So if we started out with 20, we have a negative cash outflow of 61,343. What we're going to end up with in our bank is negative 41,343. So that is the sum of these two. So our column is internally consistent. So what you need to do when you do your cash budget is just check that your total column can stand alone. Does it make sense even if you can't see column C to H? So does it add down and make sense internally? If it does, then you're on to a winner. Just finally, conditional formatting. We talk about it on page 50 of the workbook. just remember you're going to home, you're clicking on conditional formatting. I can't do this because I've protected my work